Okay, today's Friday, and thank goodness. I don't know about anybody else, but today was rough. I was trading AMC, and I got bear trapped, which wasn't great. I was expecting a dive today, and I did get the dive, and I did get this motive wave completed like I thought, but then the price reversed, went higher, and then started to go down again. I said, I was right, and then it just exploded higher. So it was really rough today. Big gaps, SPY, IWM, VIX, AMC, all making big moves that seem to say, hey, we're done going down, we're going to go back up. And what I'm thinking is that we could just be an expanded flat. That is to say, we've had that big market low, the lowest low this year. We've had this bounce, right? And that lowest low would be point A. This bounce could be point B, right? We could be coming down for point C, and along that way, maybe we have a couple little zigzags along the way. It could be just an absolute pain in the ass for the next, couple of months until we get some economic data that says we aren't in a recession, in which case everyone is going to be just exuberantly buying. There's going to be this huge rally. Maybe that's the everything rally. Maybe the everything rally will actually occur when we get economic data for the second quarter of this year, and then it turns out we're actually not in a recession because maybe they've redefined what a recession is. I don't know. Anyway, big gap up. This is a rising window, and it's generally a bullish continuation pattern. This isn't quite a bullish hammer candlestick because the length of the tail relative to the length of the body isn't right. Volume was pretty low, not quite reaching that 30-period average, and RSI is still below 50. So yeah, that looks cool, but honestly, I don't know. Going over to IWM, similar story. At least IWM filled the gap, and this looks much more akin to a hammer than SPY. AMC did a similar thing. It's like, that's got to be a hammer. Just definitively, it has to be a hammer. It can't be a Dragonfly Doji because it doesn't have a close and open within pennies of each other. I mean, it's like a dime, right? It's like, it's tough. It's really hard. VIX dumping through this uptrend, breaking it. But the thing is what if VIX were to just pull back up, just and then it'd be dump time, and we get this would be a fake out, and we've seen that before in the past. So this looks really bullish. It does look really bullish, but I'm still I don't know if I'm super bullish yet. Anyway, let's hop into the intraday charts here. I was just looking at this. AMC is obviously doing something, right? So I recently had an Elliott wave count that I said was busted, but I don't know if it's busted now or not. I thought maybe this could be 1, 2, and we have a third wave coming higher. And these waves, they subdivide into their own waves. So in a motive wave, you have 5 waves, 5 of them. And waves 1, 3, and 5 of those 5 waves also have 5 waves within them. All right, so it's like this fractaling of wave patterns, and that's how that works. So when I say there's 1, 2, and 3 waves here, there's probably 5 or more waves through here, through this single push higher. And I think that's what I've seen. What I'm actually looking at right now, of course, is this triangle. I'm sure everyone's identified it because there's this clean downtrend throughout the week. And today, the price, of course, pushed up above it and closed there on volume. So that's looking bullish. And I was trying to figure out how to do my Elliott wave count because I suppose that we broke the bullish Elliott wave count because I called this peak right here, I called this the top of a motive wave 1. And no, I called that the top of the motive wave 1. That was the problem. I called this the top of motive wave 1. And when you establish that first top of 1, wave 4, the corrective wave, cannot go through there and close in there. It can't do it. It breaks the Elliott wave principle rules, and so you have to restart your count. It's like it's done, and I thought that's what we saw. But now I'm wondering if I got my count wrong because the price obviously has moved down past this yellow line, this horizontal line, several times. No problem at all. Just blowing past it, closing below there, no respect. But if I lower that horizontal level of support and resistance to this peak back here, all of a sudden it's like, oh yeah, the price hates that level. It bounces off of it like crazy. And then I'm looking at this triangle and I'm like, oh, look at that. That looks mighty triangle-y, doesn't it? And it looks like the price is breaking out to the upside, and in which case it's like, oh my goodness, what is AMC about to do? So if this is a motive wave, which I believe it is, and this is the end of the first motive wave, this drop, this retrace, that's the second wave. Now the third wave Can't be the shortest wave. It can't be the shortest wave. So typically it's at least bigger than 1. And that's how you come up with the measured move up in Bulkowski pattern analysis. But here we definitely didn't get a full measured move up. The price rose, came up to about 1525, and then started to move back down. What's important though is that when the price did drop, it didn't drop down as far as the last dip. This is another thing about Elliott wave, is that you cannot have a second wave fully retrace the first wave, because that is also a rule. And in principle, the motive wave is, the goal of the motive wave is to make progress. So if you're retracing 100% of a wave, you're no longer making progress, restart the count, out the window it goes. But here it didn't do that, right? So we have a big push up for 1, a retrace for 2, and then wave 3 starts, but it can't be this short. It can't be the shortest wave. So, well, what's important is to know is that there could be 5 waves within wave 3, right? 5 waves within wave 3. So that retrace being higher than the previous dip is a big deal, because it means this could be 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3, terminating here in this little double top. And then this would be our wave 4 coming down to about 1488, about there, 1492, whatever that is. And then we have another motive wave, 1, 2, 3, 4, 5, okay? And that would be our 5th wave, our 5th wave. So 1 peaks here, 3 doesn't peak here, 3 peaks up here, and then wave 5 is actually really, really short, and that's okay, because wave 3 can't be the shortest wave. So if wave 5 was, that'd be great. This is called a truncated 5th, and basically that's a double top in Bulkowski pattern analysis. So you get this double top going, and the price does close below there, I think, below that intermediate low. It did, but then it just came back up. So right now what we're looking for is we're probably looking for a busted double top, and busted means that it's not going to play out. Like, yeah, there's double top here, obviously, but what happens when the price moves in a way that's unlikely? Well, it moves in unlikely ways, which is generally means a lot of volatility. And right now, AMC is breaking out to the upside, right? So let's just suppose that I reset my Elliott wave count so that the top of this big motive wave is up here, and this is now just a bigger retracement, right? We're about to get another wave 3, a big wave 3, and it's like AMC looks like it's ready to explode. I've got 2 wave counts right now, and one of them is like, yeah, we'll just keep grinding sideways forever, and the other one is like, to the moon. Not to the moon, but you know, the other wave count's really bullish, and if you subscribe to Capavision, you're gonna know what my target actually is. So Capavision is my premium subscription, and it's just $1.99 a month. Like, it's a couple of day trading fees. You hit join below, and you're gonna get like these little posts that I make throughout the week. Like, I'll take a couple screenshots of my charts, and I'll do a little write up, and then I also do a weekly video where I cover the 10 largest market cap stocks in the U.S. equities markets, and then I do Bitcoin, oil, and gold futures. And I do in-depth AMC and GME analysis. So if you liked any of that, this is just like a little taste, a little dose of what I do in Capavision. At any rate, I'm going to clarify all that. I'm going to annotate all of that for this week's video coming up. So if you want to see what that looks like, you know, subscribe, support the channel. This is a good time. So let's go have a look at GME too, just because I don't look at GME enough, right? Let's see here. GameStop it can't beat that downtrend. It hates that downtrend. But look at that, huh? That is breaking out, closing above, but we're gonna need to see a more meaningful push higher before we're like, break out to the moon. It's gonna need to move up a little higher and then close up there. It's also gonna have to form a minor low above that downtrend, because that's really what qualifies a trend reversal, is when the price moves up and then it pulls down, okay, the retrace. What's important is that retracement, that dip, is going to be above the last low and then make a new high. And so, you know, double top would just stop right there, right? So that's why you've got to get this meaningful new high. And that would be a 1, 2, 3 trend reversal officially over that downtrend, and then it'd be like off to the races. So it's looking good though. Doesn't that sound good? GameStop's ready to go up if it gets another couple of good days. AMC is looking like it could go up if it could get another couple of good days. And the markets in general look like they want to go higher too, right? Could the everything rally be about to begin? It really could be. It really, really could be. And what's our economic news? I got some notes back here. I don't have anything here. I gotta look up some more stuff, I guess. We're in the middle of July. So it's gonna be a while before we have any Q2 economic data, I think, right? Because we just finished it in this last month, so it might take a month to get like preliminary. I gotta do some more research. But right now, it's looking like the markets want to go higher and the meme stocks are ready to explode. Don't sleep on FFIE either. Also, Obi-Wan Kenobi is now starting a YouTube channel and a Twitter. So maybe I'll pull up a screenshot of his Twitter page here. Or his YouTube, but go check him out. Go give him a follow. So worthwhile. That guy makes a lot more money than I do on the markets. Like, I'm not. I have fun. I like to play in the marketplace. I don't always invest responsibly. Anyway, that's gonna be all for now. This is longer than I wanted to be. So happy trading.